policy, how your policy is being structured, and have insight into some of the insurance gotchas before you may potentially be on the hook for a claim-heavy property investment. And so the first one that we're going to focus on is a big one, and it's something that's critically important to protecting both yourself and your rental property. And that's your declarations page. I'm not sure how familiar you all are with your declarations page, but hopefully after today, it'll be one of your new best friends. Your policy declarations page, which is often called a deck page, is basically the summary page of your insurance policy. It outlines all the key details of coverage in a very concise format. It's typically the first page of your policy documents. Your full insurance policy that you receive can be anywhere from 20 to 60 pages, and it typically includes a policy jacket with general conditions, your dwelling and liability coverage forms, any endorsements or optional coverages, and state-specific notices and disclosures. And this can be quite a long series of technical insurance language, and that can often be overlooked. So what your deck page thankfully does in 1 or 2 pages is summarize everything that you really need to know about your policy. You can think of it as your cheat sheet or Cliff's Notes that highlights your coverages and those limits for each of those coverages. When you're reviewing your coverage types and limits, it's important that you closely and regularly review those coverages, and particularly if you've made any recent changes to your property. These could be things like renovations, enhancements and upgrades, even if there's a change to the occupancy on your property. One thing that we do recommend, just to make it easier, is to snap a photo of your deck page and keep it close at hand, and review it annually, or if you've made any changes to your property, to make sure that you don't have overinsurance or underinsurance. And an agent like one of those at Steadily can help you understand if you still have the relevant coverages that you need for your specific property use case. So now that we tackle the deck page, let's talk a little bit about insurance more broadly. One of the biggest things that we see regularly at Steadily is a misunderstanding by real estate investors about the type of coverage that they truly need to purchase for their rental properties. A partner of ours, Turbo Tenant, recently did a survey that showed that over 40% of rental property owners are relying on their traditional homeowners insurance policy. And you're likely familiar with your traditional homeowners policy because it's what you would have on your primary residence as the owner. The big call out here is that if, as a rental property owner, you're relying on traditional homeowners insurance, you can actually be denied a claim if your property is not owner occupied. So this means if you're renting it out, if you have tenants, the insurance company looks at that as a different risk profile. And so they can deny your claim if they discover that you are not the one actually living on that property. So if you're renting out your home, what you really need is landlord insurance. So landlord insurance is commonly known as rental property insurance, and it protects your property, your landlord liability, as well as any of the tools or resources that you may keep on property to help maintain that rental property. So that could be like lawnmowers, things like that. The biggest thing for landlord insurance is that it's also tailored towards the needs that are specific to landlords. So there's different types of coverages that are included that are specific to non-owner occupied properties. And they can also have policies structured to protect long-term rentals, short-term rentals, mid-term rentals, like someone already highlighted on the call today, including Airbnbs. Landlord insurance can sometimes be confused with renter's insurance, but they are two distinct and complementary policy types. And so landlord insurance is, as I mentioned, for the property owner to protect the property itself and their liability. Renter's insurance is what you would want your tenant to purchase, and that protects their personal property and their own liability. So the two work hand in hand, they complement one another. The tenant pays for the renter's insurance, and in that way, both policies are offering peace of mind for both parties in that rental relationship. So when it comes to landlord insurance coverages, I mentioned earlier that there are some distinct coverages that are included in landlord insurance that aren't part of your primary homeowner's insurance. The standard part of the property is surprisingly similar to what you would expect for primary homeowners insurance. So that's things like fire, water damage, wind and hail. But the specific coverages and endorsements that you as a landlord will want to have can also include things like loss of rental income. So loss of rental income is in the event that you have damage to the property and you need to file a claim and you need to relocate that tenant for a period of time. Loss of rental income will help navigate that loss and help ensure that you aren't having any undue financial burden as a result of having to make those repairs. If you're in the unique situation where you are living in your primary residence, but you're also renting part of it out, you might need all three coverages, in which case you would have your primary homeowner's policy, your landlord policy, and then your tenant would have renter's insurance. So now that we've gone over what landlord insurance covers, there are a few things that it won't cover. There are additional policies and endorsements that you can add on to your standard landlord policy for things like flood or earthquake, or a common one that we see is umbrella coverage. We're also increasingly seeing requests for guaranteed income insurance. And so depending on where your property is located or the type of investment strategy and capital requirements that you have, there are these additional options that you can build on to enhance your policy to help meet the specific property and coverage needs. So I've gone through a lot already. Before we dive further in the presentation, I'm going to pause for a little bit to see if there's any initial questions that Lyndsey or I can answer.
I love when we talk about insurance. There's always like a zillion questions in my experience, which is great, getting everyone's wheels turning. So I'll throw a few at you here. Can you explain how you may get to this? So say if you're going to get to it, no worries. But can you explain how umbrella policies work? Is it possible to protect myself personally as well as the properties and businesses owned under multiple entities?
Lyndsey, can I hand that one over to you?
So typically speaking, an umbrella policy is only going to cover liability. Okay, so it's excess liability. So let's say that you had a landlord policy in place and you carry 300,000 in personal liability. Anything excess of that, if you were to be sued for, 500,000, a million, that's when the umbrella will kick in. There are different umbrella policies. So there are personal umbrella and then commercial umbrella. So for things like businesses and whatnot, that would have to go under commercial. But for personal residents, personal automobiles, things like that can be covered under an umbrella policy. But it is only excess. You have to have that primary policy in place first.
And I would imagine, Lyndsey, that your team kind of would help an owner navigate. Is it needed? Is it not? When do you need it? I'm sure. I know that's important conversations. Okay, cool. Questions, topics of, okay. Oh, someone was just listing all the things they want to learn about. Okay. I don't know if that was a question. Okay. So I heard when a tenant makes a renter's insurance claim, it attaches to the property and affects your landlord insurance rates in the future. Is that correct? Good question.
So if the renter is making a claim on under their renter's insurance, is that
Yeah,
right?
I heard that when a tenant makes a renter's insurance claim, it attaches to the property and affects your landlord insurance rates or their landlord insurance rates in the future. That's what they're asking. Is that correct?
So renter's insurance typically covers the renter's personal belongings, loss of use, personal property, like I said, and liability. Okay, so if there's damage to the home, that would fall under the landlord insurance policy. That's what's covered under theirs. The renters is really the two most important coverages under the renters is going to be personal property and liability coverage. So if they are if a renter's filing a claim for liability, then yes, it could potentially fall under the landlord's, claims history, depending on what happens with that. But for personal property, no.
That's a good point here. If it's only tenant occupied, and then we'll take a few more because we keep getting more. If it's only tenant occupied, do you need landlord insurance or do you need it in addition to homeowners insurance?
So only one policy will pay out. And that's a great question because I get asked that a lot, and a lot of our agents do. Um, so if you are, let's say you've got a primary home and you rent it out seasonally, on a short-term basis, there are certain policies that are designed to cover both of those circumstances. It's called home sharing. But if you carry a homeowner's policy and a landlord policy, there's only one that's going to pay out. So there's absolutely no need to carry both.
In the case that you just said, the home sharing policy, what is that under? Is that under homeowner or is that under landlord?
So it is typically, I've seen carriers do it under a landlord. I'd say it's most common that it is a homeowner's policy that has the home sharing endorsement that's attached to it that just covers that risk, for it being rented out. I've seen it done both ways. I'd say it's most common though to have a homeowner's policy with that.
That's great. Things that I never heard of home sharing policies. So that's awesome. I'm like, I didn't know that was a thing. That's important to know. Okay. Lisa. Hey, Lisa. No, you, Lisa. Hope you're doing well. I see a lot of landlords require renter's insurance. How does renter's insurance help landlords? I think you kind of mentioned that, but how does it actually help the landlord? I guess that's the angle of the question.
So one of the biggest things is liability coverage. So if something were to, let's say that the tenant was being, negligent and, let me give you an example, left the stove on, right? Or left a straight iron on the bathroom counter and left, and it ended up, hopefully not burning the house down, but causing damage, then the landlord could go after the tenant's renter's insurance to, collect payment for damages instead of having to claim it under their own policy.
Okay. Interesting. This is a good one too. With so many major weather events happening more frequently, do you advise that people purchase additional coverage like flood insurance?
So it really depends on exactly where you're located. If you've ever, spoken to a flood insurance specialist, there's certain rating factors and flood zones that you can take a look at to see if it is necessary. I do know that some lenders in coastal areas will require it. So it really just depends on the area and what flood zone that you're in.
I learned this the hard way, but it also matters if the property is in the flood zone or the property. I mean, sorry, the land is in the zone, or if the property is, and that's a whole other level. So yes, it's many layers. All right, we're gonna do one more question here, and then Dana, you're asking, okay, what about the owner being listed as additionally insured on the renter's insurance policy? If there's damage, say a fire, when the tenant is responsible, wouldn't the renter's insurance provide primary coverage to the owner?
So the benefit of having the owner listed as an additional insured, think of it as having a homeowner's policy or a landlord policy and having a mortgage company listed. That means that if there is, a payout, a claim payout, then the additional insured is going to be entitled to, some of that payout depending on the situation. That's really where that comes in, just that they're covered as well.
Yeah, makes sense. All right, we're gonna take a break from questions. I want to have you keep going, and then I'll make sure I keep going with the where we left off.
Perfect. So the next thing we're going to dive into is a great topic here, and it's all about the balance between your coverage and your cost. So insurance is increasingly becoming a key line item for real estate investors, and you're managing your overall cash flow, your wealth building strategy, how you're looking at your rental properties and your costs. And the great news is that there are some key ways that you, as the real estate owner and rental property owner, can manage those insurance costs that are within your control. here are a couple of the key ones. So, of course, reviewing your policy annually. I mentioned earlier making sure that you're not overinsured or underinsured, and that if there's any changes to your rental property during that period of time, whether it's tenant vacancy or occupancy types, those things can all be changed on your policy to either lower or raise your coverages depending on what you need. There's numerous discounts that you can apply for when working with your insurance partner. So if you have safety devices or theft prevention mechanisms on your property, all of those things are considered by your insurance provider and can help provide you with discounts to lower your premium. Increasing your deductible is a great strategy and something that I'll get to in more detail in a minute. So I'm gonna glance over that one. When you're looking at rental properties, newer construction is one of the things that you can consider that usually has much more affordable insurance rates, just given the lower cost of repair and maintenance on a newer build property. And lastly, when you're looking at investing in new properties, educating yourself on the broader insurance market in that region and what kind of costs or considerations or risk profiles are within that area. I'll also get to that in a second. So let's look at a couple practical life scenarios here. So the first one, we're going to look at an opportunity to increase your deductible and lower your monthly premiums. And so what this looks like is you can elect to have a higher deductible on your insurance policy, say somewhere in the market of $5,000 to $10,000. This lowers your insurance premium on a monthly basis, which helps with your overall cash flow. And you can park that savings into an account that you only use for major losses, you only use insurance for major losses, and you can use those savings for smaller things so that you don't have to file a claim. So what this looks like is, say you're an experienced investor, you're comfortable with your risk profile, you've been managing rental properties for some time, maybe you have some nice cash reserves that you've built up, and you don't want to use your insurance unless it is a significant loss. This would be a good strategy for you to manage cash flow by increasing your deductible on your insurance policy. The next scenario is the flip side. So you can also choose to have a lower deductible, which would give you a higher monthly premium. So this means that you're going to be paying a little bit more on a monthly basis. Your deductible may be something in the range of $2,000 to $5,000. This gives you the opportunity to use your insurance policy more frequently and gives you a smaller out-of-pocket burden. So the nice thing here is if you're a newer investor, you might not have as many reserves built up. You want to make sure and have peace of mind that things are covered if you need to file a claim, and that you won't be paying a large out-of-pocket deductible in order to rely on that insurance policy. So this one's a good one if you're a bit more risk averse. There are a couple places in structuring your insurance policy where it might also make sense to invest a little bit more in your coverages. Having high liability limits, depending on, again, your risk profile, is a strategy that we often see real estate investors choosing to have higher liability coverages built into their policy. The loss of rental income coverage is one that I mentioned earlier. We're increasingly seeing investors asking about this one. Gives a lot of peace of mind in the event that you do have a loss of rental income during a claim. Water backup is an interesting one that we see a lot in specific on the short-term rental side. So if you're managing an Airbnb, you might have guests on property that don't quite know how your plumbing works. They put something down the pipes, and then you're out for a significant loss. Water backup coverage is one that you can elect to add onto your policy. That's highly recommended in that instance. And then the last one is replacement cost versus actual cost. And what this means is when you go to file a claim, if you have actual cost value built into your policy, it will pay out less than if you had replacement cost value built into your policy. So that's something to keep in mind as you're structuring your policy, to consider what you need in terms of that claims payout to help manage your cash flow in the event that you do have an incident.
I have a quick question. I know everyone's going to be yelling at me. They're like, why are you asking your question when you're not asking my question? But I'll get to everyone's questions. Don't worry. So this is an interesting question from the perspective of, as everyone's on the call, navigating asset and navigating strategy, right? And we always teach that, is that you can have a single family home and you can do, co-living to long-term rental to midterm to short-term. There's so many ways to have revenue and you're coming into your rental. But then the question becomes, you said something about new construction versus existing, like a 1980s, 1970s property, right? There's more risk in an older property than something that's been newly built. I get that. is that the same? How do we think about strategy? So based on my point of a long-term tenant, from a short-term, tenant to a midterm to even co-living, which is a growing trend of renting by the room. Is the strategy just as important to navigate from a cost perspective as the age of the property, or are they two separate things, two separate risk profiles? I'm just curious, because that's important to navigate as we're thinking about property and how to maximize the most we can. Does that make sense?
Yeah, Lyndsey, do you have a take on this one?
So I lost her halfway through.
Okay, I'll
It
bottom
broke
line.
up.
The question is, the age of the property matters in terms of
It does.
insurance rates, but in terms of strategy, right? Because I could take the same 1990 property and rent by
Right.
the or do a long term or do a midterm or do a short term. As the investor who's figuring out, is this something I want to acquire with this particular strategy? I got to think about my insurance rates then as I'm underwriting, right? If I'm thinking it's going to be 800, but it's really going to be 1600, well, that makes a difference. Every little bit counts these days. So how do the strategies, if you will, of the same property impact my rate? How can I think of it? What's more riskier? Is a long-term tenant, I would think, less risky than a short-term tenant, but I'm not an insurance agent. So I'm just trying to school the folks on here thinking about their strategy and the age of the property. That makes sense.
Yeah, that makes sense. So I would say that you're correct. Short-term rentals do typically present more of a risk, with people coming in and out. Um, I It also differs between states though. So I don't know,
Okay.
every state has different rating factors. So I wouldn't have, statistics to
A
give
blanket.
you.
Okay.
But I will say it's not a significant difference in premium.
Okay.
We're talking pretty minimal.
Got it.
Um,
Okay.
as far as the age goes, that's, I will say, does have a pretty significant impact on premiums, especially homes built prior to 1940. It's also going to depend if, the HVAC, roof, electrical, plumbing has all been updated. So I would say that, older homes definitely do present, a higher premium than the newer ones. But again, that could also vary based off of location as well.
Okay. Very, very helpful. Thank you. And we'll get back to the other questions.
That's actually a great jumping off point into the next segment. Are we want to do a couple more questions first?
Yeah, I can do one more here. I think this is sort of related a little bit to, again, strategy. But if somebody builds an ADU on their property and rents it out, will they need to have a rental property? They need to have rental property insurance policy solely for the ADU?
So are we living in the primary home and then we've got the ADU and we're renting it out?
I think that's the case. I think so.
Okay, so yes, that is a separate policy then. It's honestly like a standard landlord policy. The liability differs a little bit. There's some requirements like, the liability coverage that is carried on the primary homeowner's policy has to be matched to the liability that's carried on the ADU policy. But if they are different occupancies between the two, they do have to be two separate policies.
Makes sense. Just like if you bought a rental property, you're going to have a policy for that as well. Yeah.
Right.
And then in terms of what type of insurance would you suggest for lot rent? The tenant has their own mobile home on my land. Okay. So the tenant has their own mobile home. They're on, and they're, I guess, renting the land from this particular operator. So is there like a lot rent? What kind of insurance would they need to, provide?
So this one's a little tricky. Typically speaking, like landlord insurance policies, homeowners policies don't cover the land.
Okay.
What you could take a look at doing is a just standalone liability policy, like premises liability policy. That would be my recommendation. But yeah, they do have policies for vacant land, but it's not vacant if somebody's living on the land.
Got it. Hope that helps, Stephanie. That's interesting, Stephanie. I want to hear about your project there. It's interesting what you're doing. Okay, so that's good. We're good with questions for now. Thank you, Lyndsey.
Of course.
So the next thing we're going to dive into, which we're just talking about which regions have different risk profiles where we might want to consider before our next rental property. So there are a couple watchouts. There are some challenging markets for all carriers. So anywhere coastal that has a higher risk of high wind, storms, flooding, parts of the country that have higher wildfire risks are also challenging and expensive for getting an insurance policy, regardless of the carrier. The places that we've shown in the map here that are highlighted in purple are typically where you're going to have a much more expensive insurance policy. And you might also have a more difficult time in getting that insurance policy because there might be some more showstopper restrictions on your underwriting requirements. So just something to keep in mind as you're thinking about your investor strategy, especially if you're looking out of state. If you're thinking about property specific, so you've got a great opportunity, maybe in a state where there doesn't have any significant wildfire risk or catastrophic loss potential, and you found a great property that you want to look at, there are a couple of things that you should still have in the back of the mind as you're assessing this property and how much your insurance costs are going to be. So we spoke about older homes already. They tend to have more electrical risks, so oftentimes knob and tube wiring, older circuit breakers, things that could potentially be a risk of a fire damage claim in the future. Cast iron galvanized steel pipes are something you oftentimes see in older properties as well. Roof condition is one of the biggest rating factors when it comes to the overall price of your insurance policy. So if you're buying a property that looks otherwise fantastic, but it might have an older roof that soon needs to be repaired, that's going to be taken into account in the overall cost of your monthly insurance premiums, because the insurance company knows that at some point in time, they're going to have to replace that more expensive part of the property. Something else to keep in mind, things that could cause debris in the storm. So overhung tree limbs, any excessive growth in and around the property that could potentially fall on the roof or cause other damage. Oftentimes before you'll bind your insurance policy, the inspector will actually require you to trim back those branches in order to have it meet underwriting criteria. So something to also keep in mind that could be a hidden cost before you close. We mentioned earlier about discounts. So safety-related features built into the property are great in the eyes of insurers. We love them. So if that's something that you can add into your property, or if it already exists before you purchase it, perfect. You'll get a discount for that. Lastly, things that can cause a little bit of a higher liability risk profile are swimming pools, trampolines, hot tubs, things we love. They can help increase your short-term rental costs, but they do unfortunately come with a bit of a higher insurance cost when it comes to your monthly premium. So the good news is that there are also some great stable markets that insurance companies currently love when it comes to your insurance premiums and your risk profile. We've highlighted a couple here that have been shown in bigger pockets in some other communities, and that we also totally agree with. So if you are thinking about out-of-state investing, or you live in one of these great insurance markets that are stable, that's great news for your next rental property purchase. And if you are looking at your next rental property, we also have developed a great tool that is a landlord insurance calculator. It lives for free online on our website at steadily.com, and you can simply enter your property address or the prospective property address and a couple more pieces of information. It'll give you an instant estimate so that you can then use that insurance price as part of your deal analysis and help determine if it's going to impact your cash flow positively, negatively. And when the time comes when you are ready to get an insurance quote, we have tons of expert landlord insurance agents at Steadily who would be more than happy to help understand your real estate investment strategy, work with you on a personalized quote. So we recommend you can scan the QR code or go to steadily.com, and we highly recommend you bookmark that link. And so that's kind of the end of our presentation today. I'm sure Lyndsey has a lot more information that she can also share and help answer some more questions, but just to tie it up with Steadily, We are landlord insurance experts. We love working with real estate investors, particularly part of the investor community. If you do have any questions about your existing coverage and whether you're underinsured or overinsured, or just want to share your deck page with us, we're always happy to give you an expert insight. And of course, we're here if you need a quote or want some additional information.
And can you, what's the best way to contact you guys in terms of like next steps and getting a quote or getting connected to someone? Okay, perfect. Okay.
Yeah, thank you. So yeah, we do have a great relationship with the investor community. And so if you go to investor.sellypartner.com, that's the easiest and fastest way to get a quote. You can also send a spreadsheet of your existing property addresses over to Lyndsey. Her email address is located here. And she can help you with getting some great quotes for your existing portfolio of rental properties, if that sounds of interest.
Can you put those two links, if you don't mind, in the chat box for everyone just to do like a quick copy and paste? Yeah,
Yep.
that'd be great. So a couple more questions here. Okay, I'd love to tell you more. Okay. All right. So Stephanie, you got Stephanie's information. She wants to get connected in the chat box. You got that?
I'm typing that right now.
Okay, cool. All right. So you get the stable markets. Yeah, is this interesting, right? Boise doesn't surprise me. Utah is interesting too. I think that's curious, like what was the criteria? So if I'm an investor and I want this to be part of my decision making as I'm navigating where I should buy my next deal from, why these five? Was there any consistency between these five? We could definitely read that article, certainly, but I was just curious, high level, was there something there that we should be looking at too as investors?
So from an insurance rate specific, and Lyndsey, feel free to jump in here, these tend to be markets where there is not a high degree of risk. They're not in any coastal area. They typically don't have any excess kind of concern. There's a couple other states like Nevada, for example, and not only is there not a high risk profile, but the prices tend to be quite affordable. So you can often get landlord insurance policies under $1,000. And so it just makes it very attractive when you're thinking about your cash flow, how much you want to pay for a monthly premium. I'd say a lot of the, Ohio, Utah, Arizona, Nevada, a lot of states like that real estate investors could find a lot of success with from an insurance perspective.
Yeah, I know. I mean, Boise is very popular in a lot of ways. I've heard, good things about. A lot of folks from California have or moved to Boise. So I'm sure that's driving up costs and it's going to become like a mini California. Then people are going to get outrights there. But that's what happens, right?
I lived there for 6 months and I highly recommend it for anyone who's considering Boise. It's awesome.
Then the next question, again, I'm pretty tapped with a lot of my active projects right now. But what I hear a lot of women doing in our community, and this is just a little bit of an interesting strategy, right? I'd get really curious about those 5 particular areas and what strategy you can utilize in those areas, right? Because it's not just a property, a single family home or a duplex, which I think so many investors get so fixated on. It's about the strategy at which you use, what's needed, right? And there's a housing shortage across the country. So the need for quality housing is always going to be important, but what's needed there? Don't know those answers. I'm not expert in those markets, but as an investor, that's what I'd be asking or curious about, and how I can maximize my property in those areas. So just a little quick tip there that I would do if I was all of you. Jacqueline, what do you recommend for someone who's renting out their pool or yard space at their personal residence? That's interesting. Renting out to who? Is that important to know? Jacqueline, like you're renting your pool to whom? I think that would matter, wouldn't it? Like if it's a business or a person, would that matter, Lyndsey?
That was going to be my question.
Yeah. Any people. Okay.
So is it advertised online or are you letting the neighbors come swim?
Oh, through Swimply and other platforms. I've never heard of this before. So there's platforms that allow people to utilize pools. Oh, that's interesting. Okay.
Yeah, I've never heard of that either.
I'm going to write that down. I don't have a pool, but now I'm just super fascinated with the fact that you can do that. Your insurance question mark is going up in your head. Like, are these people properly insured is the question.
Yeah, so interesting. My recommendation would be to contact your current insurer that has your homeowner's policy and see if that is something that is covered under liability. Um, I would be surprised if it is, if I'm being 100% honest, just in my experience, but they may be able to offer you some sort of rider. Another recommendation I have for you is definitely make sure you've got some sort of umbrella policy in place for that added liability protection. But I know personally, directly through Steadily and other carriers that we have access to, I don't have any carriers that would accept that.
That could be the rub, because then it's like when opportunity meets the liability piece, right? All those, both of those things are important, but interesting.
Right.
This is a good question too for everyone on. Does changing insurance companies frequently, i.e. if you change every couple of years to whichever company has the best rates and coverage, have any negative effects on your rates or insurability?
No, it doesn't. As long as you don't have a lapse in your insurance, basically when you take out a new insurance policy, it pulls what's called an insurance score, which is similar to a credit score. Does not have any, impact on your actual credit score, but it takes a look at things like claims history, payments, being made on time, lapses in insurance, continuous coverage, things like that. So no, it does not hurt you to shop around or take out a new policy, with a different insurance company.
I will say though, just as a sidebar, what helps is that if you are changing companies just by rates, for rates and coverage, like that matters, right? We all know that, we're real estate investors. Rates matter, especially with everything going on, and coverage. But part of the team should also be, or I should say, part of the criteria of finding an insurance partner, if you will, is that you have a go-to resource. So you're working with them strategically before you purchase a property. And I think that matters in this day and age versus just going online shopping for the best rate. Not to dismiss that, and I'm not saying that's not important, because I obviously want the best rate for my properties. But the knowledge base, that having a go-to team, especially a company that literally specializes in working with investors, is part of the process, and it really helps because it can save you money over time, right? Versus just that one property. So again, think strategically, whether it's your insurance partner, whether it's a lender, that's where that next level comes into, versus just literally shopping for rates. Because they want to work with people who are going to be growing their portfolio, so they can also give the best rates, right? Am I speaking accurately based on your experiences, Lyndsey?
Yep, absolutely.
Okay. All right, cool. All right. Okay. Awesome. All right. This has been awesome. I'd love to hear, as we wrap up here, something we love to do is hear one takeaway, something you learned, and one thing you're going to do as a result. So one thing that you got from this webinar, this live training, something you learned, and then two, what action you're going to take. Because we can learn things and get in, the needle might, oh, that's a great idea, and then we do nothing with it. So we want to encourage action. That's what we stand for. That's what we'll be doing in 2 weeks. If you've not heard or been living under a rock, we have our conference coming up, InvestorCon, June 1st to 3rd. I'm so excited. Lyndsey, will you be there as well?
I will.
Awesome. Excited to see you both.
Super excited.
Yeah, we're excited to have you guys back, and really be so many hands-on sessions. I know you guys have a educational breakout you're doing, and just so excited you're gonna be back. But it's all about taking action and moving the needle, because we can all learn things and use ChatGPT, very useful tool in our lives. But if we don't take action, right, it just becomes knowledge, and that's where it won't help us. So I'd love to see some takeaways here. Bethany, learned that I need to re-examine the insurance on our building. Thank you all. And just to be clear, that you guys will, Lyndsey, you guys will take a look at some current policies and kind of give like, kind of like a an opinion. Yeah, that looks like good coverage, or you might be missing a few different things. Is that right?
Absolutely.
Cool. And all of your information is in here. So definitely reach out to Steadily. They're so quick. Everyone I've dealt with has always been super quick. Takeaway, take a picture of the deck page for mobile reference. Definitely do that. It's a great idea. Learn that Swimly is a thing. I think we've all learned that Swimly is a thing, and now we're super intrigued by that. We'll continue to compare and purchase landlord insurance. Definitely. Great, Cassie. Very cool. The answer to my question. Okay, good stuff. All right, awesome. Well, do something with what you learned, everyone. Carla, I want to read a couple more because I love hearing what people are going to do. Learn higher saving that I thought for raising deductible action. Get quotes for umbrella policies. Yeah, and you guys offer umbrella policies, right? Do you offer umbrella?
We do.
I thought so. Cool. Review my policy for the proper coverage level now that we have rehab the duplex. Yes. Hey, Lavette, one of our Strive members. See you soon. All right, everyone. Have a great rest of your day. Leah, Lyndsey, thank you so much for I think taking such a topic that's like, it's a necessity, right? Insurance is a necessity, but to take, to share some really, quite honestly, useful information that we can take and utilize in our business is taking it to a different level. And I know that that's one of the many reasons we really like partnering with you guys. It's so important to take these things out there and make them very real for investors and move the needle. So thank you both so much for sharing your expertise. And again, so excited to see you both in 2 weeks. Carla, you're so welcome. Do something with what you learned. Keep coming to these live trainings and take action. And reach out to Steadily. These folks have your back, and all they work with is investors. So have a great rest of everyone's day. Thank you again, both of you. Anything else either of you want to leave this wonderful group with?
Huge thanks from us. Looking forward to seeing you at InvestorCon. Stop by the Steadily booth. We'll both be there. So yes, thank you.
Definitely.
Thank you, guys.
Have a great rest of your day, everybody.
Bye.
Bye, everyone.